How you guys doing? Good morning. All right. So we are back. All right. Now today, I wanted to talk about the gold back levels, right? So we talked last night about AMD X and X AMD, doing a small intro to the power of three, right? And so, for those who are always new, I always try to explain my craziness on the screen, right? Um, Number one is Monday, Tuesday, Wednesday, Thursday, right? And so obviously this helps us keep track of, time because we understand that clearly we're talking about time and price, right? There we go. Perfect. That's full screen this. Um, Now a big thing on the levels that I want to talk on, right, is again how fractal marketplace is. And even with like certain things in the marketplace that you're, let's say you're more comfortable, you say, on a certain time frame. It makes sense, obviously, when people say, well, I don't like to use the 1 minute. There's so much data down there, or I'm not sure what I'm looking at, that it just looks super random. It looks scary, and that it could just retrace it anytime, right? Versus looking at, a 1 hour chart, and these are very definitive 60-minute candles, and you know, people get more comfortable with like, one, two of these to try and take a trade rather than just like the 5 minute, you know. But if price is fractal and we look for the same structures that we talk about on our dealing range, whether it's rejection block, order block, fair value gap, liquidity void, breaker, mitigation blocks, right? And all over again on the premium side. But my thing is, you have to understand that when you're trying to point out a structure to somebody, or even yourself when you're going to use it, go to annotate it, and when you look at it on a certain time frame, annotate the time frame. So if it's a 1 hour fair value gap, okay, note that, okay, 1 hour fair value gap. And so speaking of fair value gap, and we have a lot to talk about. So again, I was showing you guys how influential the levels are. And I'm keeping on, typically I don't have it on, but my cheat sheet here is a really great reference to, again, why we know exactly where price is going to go once we are in line with order flow. And we understand that the algorithm is going to play inside of these levels, especially when we talk about the extremes of the dealing ranges. And again, the higher you go up, I'm on the 729 right now. This is going to be supported for a few days of price. When we looked at EU, the last go, the 81 did wonders for pretty much 4 or 5 days. But when we get to the Dow Jones or YM, YM and NQ run through these bigger ones like water. And the reason I wanted to show you that, right, is because, again, going to left to right, and before I get to these here, remember what we talked about, okay? So I can come in and show you more about the settings. I'm doing that a little bit every video, right? So I talked about these master switches. Okay. You have AMD boxes, just how we talked about. You can have this indicator do a version of that for you too. I use 90-minute cycles plus MTF instead, how we talked about. But what I do like is, again, adding the DR shift. I might get to half shift if we have time, but I'm not super concerned about it. The biggest thing is right here is you're probably going to be in this tab 20 times a day, right? Um, again, if the market is doing the math to create the numbers to give you the levels, right? The levels don't pop in randomly. And you can look at these things. Again, the math is perfect. So even if the candles are not there yet, you could go on and do the math and see that these are, okay, you know what? I'm on the 729 right now. My 729 low was 48.24. My high is 41.553. That's 729 in between. 243, 48.24, and then 41.067. Okay, so these are my fractal dealing range high or lows. And so the same thing, I'm looking for what we call a wireframe. I love this term, and it was really, really helpful for me when I first learned this, only because the common issue that people have when they go to try these levels and they say, you know what, well, go back levels didn't work for me, or I didn't understand what I was doing, so I just turned these off. And, I understand the frustration because you don't really see the organization all the way. So let's do this right here. That's better. So when we're looking at this partition by itself, okay, and again, I just wanted the weekend open. Look at how price, again, same thing we looked at on NQ. Look at how it references the 729 high. When we start, it does make it basically through the partition. We don't actually fully finish it. And we talked about why also. The real liquidity in the marketplace, right? It needs to finish the partition. It can make all this retracement all it wants to. And we see why it wanted to get back there. EQ will do that. And we bounce right off EQ. But my thing is, right? This low of the dealing range is still open. We never technically touched it all the way. See what I mean? A little space in between here. We made it to your order block, fair value level, and then obviously had a retracement. But we never reached that full 729 low or EXT level. Now, that's again what we call PO3 liquidity. Failure to touch a major GB level. And 9 times out of 10, I mean, I'm really looking at this like all over the dealing range. So like, even if something was coming down like this and failed to meet this bottom of this liquidity void level, and we retrace whatever, that would be me looking for look power of 3 liquidity since we failed to hit even this level. It doesn't have to be a high EQ or a low to be considered PO3 liquidity for me. For example, the same way that this week, right, we're obviously coming from the low. Price jams up. But do you see the failure to touch this here? It's the same thing on the other side I'm just talking about now. Goes up, failure to hit this high, back down to EQ. Knowing about the levels, this is not going to scare you. I said this before. Price really only does 4 things. Creates imbalances, rebalances imbalances, or PD rates rather. it will go from a premium to a discount and vice versa. It'll make and take liquidity using time. And the funny part is, when you think about power through liquidity, obviously look at these here too. The failure to touch a major level. And same thing down here. If this was to run down so badly, doesn't quite reach this level. So the next time we do, it's going to smash it. And it smashes these levels. Even though we don't quite get the low, it smashes this exact level that was missed right there. That's why this price swing is so aggressive to get down there. Does that make sense? And obviously, I said we appeal through liquidity at the bottom of this thing. We've been at the low before, but this last run down, we didn't quite get there. And that's interesting that you're looking at price turn toward the downside. But this is what's more important about this also. The same way that I'm talking about time and why you're going to be more selective about what dealing ranges you're able to pick and what you're going to do with it. This is right here what we call my wireframe. I like the 729, obviously, because YM can, smash this within a week or less, right? It really only takes 2 days to get really through the thing, over 90%. But realistically, right? And again, you can rewind the video, get rid of this. I like the organization, right? It's kind of like my OCD kind of pops in a little bit after a while when there's so much on the screen. I'm not even like super OCD. I have like real bad anxiety, but this is like, when it's so many colors and things, you're like, yo, hold on. I need to like organize this thing. So this is a big thing. And let's turn this down. Ready? Watch this. So 729, we talk about that being a wireframe. If I know that the low is 40,000 down here, like the 729 and 243 share a low. Watch this. So what is that? 4824. Let's be accurate. $48.24. Dope. Okay. Now, this is what we talked about before. I want you to understand this. Look at where price is right now. Hovering on this high. That's interesting, isn't it? Let's drag this down to time frame. 15, right? So, what you're going to understand. We talked about the peel through liquidity that was down here. The failure to reach these lows, or this low, rather. But the 243 and 729 share a low. The 2781 and the 243 all share a high. So when this is spooling down like this, look at how price is influenced by what? Gold back levels. Are you surprised that price is going to seek an EXT, a high level? And look at every time we've reacted from it. And I've given you why it looks the way it does each one of these times. What is that? Stop run of the previous dealing range. I'll just say DR, right? When I say stop run, that means the taking of liquidity somewhere. And so it doesn't have to be all of these highs in here, and we jump into this imbalance, okay? Similar to NQ, very similar structure to NQ, right? Stop run, we run into this imbalance here, and that's why I always lock my boxes because I move them. Let's lock this thing. And Get rid. Cool. Clear stop run. And this is what you have to understand and pay attention to when you're studying. So the same way it's on my screen right now, price runs up. This was a massive downside expansion on the Tuesday, but it's going to offer some sort of retracement or gap. This was such a massive run. You're going to look for some measure of retracement. It doesn't have to go directly downside 2 days in a row. And remember what we talked about really quick. And we'll jump back to this dealing range. But look, what did we talk about last night? How do you actually come in and understand what the expected price action will be? It's no different for YM. Look how consolidated the Monday is. So what do we call that? That's your X. Actually, matter of fact, this is your A, rather. It's an A. It's an M. My bad. Let's do that and then bring it down. Yep. AM, D. And again, we have another distribution cycle here. AMDX. It's 4 parts to your cycle, right? And so even without looking at what happened already on the day, we're obviously just stepping into 8 o'clock. So we're about to obviously optimal trade entry time, New York kill zone. And again, we're looking for what price has to offer, not just through our goal back levels, but again, via market structure. And so, and you thought I was a one-trick pony. No, I'm a market structure expert. I could take all of the extra fancy stuff off and trade the same exact way. You have to understand time and price is important. You don't have to come in with one singular concept or idea that even I teach you. You can use whatever you like, but you will understand that the algorithm is perfect. So when we talk about time and price, AMD, gold back levels, and now directing your attention to this 243. This is where we put it all together, okay? Because when we talk about expected price action, distribution cycles are long, intense price swings. And you get that on this day. Manipulations are too far too fast. Takes a lot of liquidity. It does that on this day. No problem. In the same way that we could pop down, and again, we talked about this last night, right? Watch. Even throughout my gold back level, all that, we understand where the extremes of the dealing ranges are, right? And look at the reaction every time you hit EQ or a little bit above it. What do we talk about the EXT level was? My bad, EXT. This is the premium of the premium, isn't it? Now, to be clear, I wanted to show you this. When you're looking at price, obviously when we're in this dealing range now, we're underneath this high. If this goes back above this price here for 1067, we're going to go into the above 243 dealing range. We'll be in another discount instead of this premium. The EXT level will only be shown to you here when we get to this one. Because watch. This is what I mean, and I don't want to confuse you, so I have to show you. See what I mean? When we shift it up, this is a discount. But price is not going to do that, or the indicator is not going to shift up randomly until we would shift back above this low price, or the 410.67. Underneath it, you're in a completely new dealing range. Does that make sense? The indicator is only going to shift up again when you're in this dealing range, actually. So when we jumped into it here, this is what it looked like to us visually at that time. But that's what I mean. You can understand that, yes, there's a whole dealing range above you, but you need the market context. Are you bullish? Are you bearish? Where is the liquidity involved? You're not going to step into this dealing range and start buying shit here just yet. But you can see the low is shared here with a bunch of dealing ranges. So when you have all this movement here, you're looking to see if price wants to, see what I mean? Run up and support from the EXT to make another run up, or we want to know if it's going to respect the one that it's in currently underneath us. And so when I shift it back to current, all we're doing is watching for how price wants to react in this area now. And again, this is a 243 dealing range, so this is going to be, you guessed it, a good amount of ticks. Not just for profits, but when you're thinking about how long some of these dealing ranges take to complete, the 3, 9, and 27 are great to spot stop runs, or great to spot when price is no longer going a certain direction. And people say, yeah, well, is it worth it to even look at like the 81 or the 27 because, YM and Q just smashed them. And the thing is, it is completely worth it because think about this. Some of these dealing ranges share a high and a low. If you're at a shared high or at a shared low and you understand the assignment, you can come down to a 27 or an 81 and nail your entry. You can straight nail it. And you understand that these are smaller partitions. These don't take very long to fill. So me looking at the 81 right now, you really only need an 81 daily range on YM or NQ with 2 contracts to pass damn near any funded challenge. So when you pass through an 81 on NQ, it's roughly a little over $1,000 with one contract. If you're trading, yeah, if you're trading NQ1, right? Not like MNQ, but, and see what I mean. We're looking at the reactions from this dealing range. Look how powerful that is. Look at that. And like we said, we're looking for vibes. This was a stop run of your previous DR. And look at how perfect price is reacting from the high here. You could have sold that. You could have scalped that. No problem. And you know where it's going to land. The funny part is, it's 8:15 in the morning, right? So this is what you need to be comfortable with. Okay. So we have our 90-minute cycles. Now watch. We understand the dealing range high is here. All right. The 81 is great for intraday for NQ and YM. Between the 243 and 81, use the 243 and 729 for your wireframe. So if you want to know where it's really going overall, you're going to keep that range open for yourself visually. You can take trades and manage your trades from the 81, 27, okay? So if you share a high or you share a low and you really feel like, you know what? Damn, I think I'm at the high or the top of this dealing range and it needs to come down, right? And like I said, you understand this. So that small retracement just now should not scare you. I'm on a 3-minute chart. Let's bring it down to a 1. And watch this. The reason why I brought it down to a like a 3-minute chart, it makes the accumulation look not as crazy. Okay. It's a little, skippy. So it's annoying looking. But watch this, right? Before we're gonna hit this equilibrium. But this is what I want you to understand. This is New York's 90-minute cycle in action, right? So we're looking at this Q1, which is always going to be your 6th to 7:30. That is massively consolidated, isn't it? It's an accumulation. It's going to look like this. The expected price action is already showing us what the vibe is. It's going to be perfect like this every day. I'm trying to tell you. Q4 is distribution. That's why it looks like this. This is an accumulation, manipulation. And what did I say about Q2 versus Q1? It's likely to take out both sides of liquidity, right? Let's change color here. Let's do like a yellow or something. That's fine. But this is a big thing, right? Manipulation takes out both sides of your previous accumulation. Manipulation is always like this, and it scares people. It's really, really far, really, really fast. Do you see what I mean? That's why I love when we talk about AMD cycles. You can come on here and dominate the price, understanding, yo, you know what? I might not want to trade here. I'm going to wait for a manipulation or a distribution because you understand what this looks like. Again, just to give it to you, AMD is a long, intense price swing when you get to distribution. Manipulation is, again, it could be kind of like a stepladder kind of effect, right? Same thing here. It goes, but it's kind of just making its way downtown and just literally just snapping on the distribution side. It's consistent still. We talked about how Q3 can run one way. Q4 as a function can reverse from Q3. Does not have to be a straight reversal every time. Doesn't have to be a continuation every time. This is a example of your Q4 as a continuation. I'll put that on screen. Q3 is distribution for your note. Q4's job can be a continuation or full reversal. So you must understand this. I need you to be clear with that, okay? Because look at these differences. And hold on, look at our dealing range. What did I say about that EQ? I told you exactly where it's going to go. I told you where it's going to go. Watch. Do you see why I switch back and forth between certain things? This is too far too fast. Do you think it's really going to stop and not take this EQ? You're tripping. And look what it did here. What did we talk about? Power 3 liquidity. Failure to reach this EQ the first time. So what's it going to do? Smack it. Exactly. You see what I mean, right? That was power 3 liquidity. Failure the first time, and we retraced a little bit. Everyone thinks the move is done and gets scared. No, you're still in a premium. And look at where we focused on. Watch this. PO3, let's annotate. PO3 liquidity. And we're going to do, obviously EQ was our low target. But look, where did we start from? Oh, they're going to say fair value gap. Okay, cool, whatever. But we talked about the EXT level, which is the premium of the premium. So you needed to be looking for sales, like I told you. So you could have sold EXT, right? And again, you understand how these move if you trade futures. You don't need this to move ridiculously to make a lot of money, man. Now watch. Where's your next one? You could have grabbed it off the high and you target your EQ. Let's say you got it at the high, right? Let's do it that way. Let's say you caught it off this candle's expansion. You can put a little stop loss up here. Now, me personally, I like to grab it when it's wicking out. And we're going to talk about like entry methods, but I like to grab it when it's wicking out and it's already leaving that trail. It's leaving a footprint that this is higher high, lower high. This right here can't get back above this wick right here. It shows you that it drops down, gives you sell side liquidity, pops back up to a high, rejection block, order block, whatever you would like to use in here. So the order block's here, no problem. And you could trade that down. If you feel more comfortable with the order block, then use it. You could trade right off this high if you understand the objective here. You're in a premium. The 81 is great for intraday. So when this partition gives you a nice little, and going from left to right, it gives you a stop run, how we talked about. Let's get rid of this. Let's talk about AMD in a second. We have a stop run of the previous dealing range. There was a fair value gap up there. When we came back into the dealing range, it left PL3 liquidity open. It tried again, couldn't make these highs. Back down. Small turtle soup in here. See these highs taken? Right? And what time is that? This is like your, again, manipulation. That's what I'm saying. If you understand what we talked about, you could take a trade above this Q1 during manipulation. And look, what I'm telling you, you need to understand the levels are influencing price. How difficult is this? I told you where it's going to go, and it smacked it. We have been bearish this week. You're not going to randomly look for buys or get confused about this. Look at how price is moving. It's a distribution cycle. You understand that it's 90 minutes of this. So if this starts at 7:30 and it's 8:24, so 9 o'clock is when this stops and distribution starts. But that's what I mean. This is going to be too far, too fast. You can come in and wake up and look at this and come and trade this because you understand that manipulation is on time. AMD is not a random time to you. And again, we talk about why, the function of this, and the expected price action. Look at it. Look at it. You feel me. And you see why I teach this way. And I love that Hoppy gave us this type of work because it paints the picture as to why ICT concepts are amazing, but you feel like you're slightly incomplete. You feel like, yo, well, like if that's a real dealing range, or people don't understand where their dealing ranges are half the time, or they don't understand that they're now in a discount. But you can clearly see that. Under EQ, we're in a discount now. I just said price does nothing but seeks a premium to a discount, and vice versa. So you tell me, what is it likely to do? Fill in the partition. Okay. But again, we're coming up on another opening price, 830, right? But this is what I wanted to show you. Not even just our AMD and expected price action, right? Now you catch the vibe of what I'm talking about with A, M, ultimately it's not there yet, but a D, X, right? Watch. And this is London's. A, M, D, X. How do you trade that? Q3 takes out Q2, AMD turtle. If you're confused about turtle soup, go watch my video on my page about turtle soup again. Okay? But the high is left open. So when it starts to randomly starts to move up with a lot of energy, it's not lethargic or anything. It's likely going to take out that Q2 high and probably more liquidity. But you can go check gold back levels if you want, right? And look at this. We always talked about it. That's nothing but power of 3 liquidity, isn't it? Because how do we know that? Failure to take that level. It could do all it want to do in here. Doesn't matter. This is just new liquidity for it to be set up now, right? It could run all the way to the high. We don't care. You understand now where your range is at. It doesn't scare you when price makes some of these retracements. And I've also told you about EQ. A lot of consolidation happens on EQ or right above it. Now, the biggest thing here, we're talking about AMD cycles and how they play into the levels. Do you see how when we consolidate on the EXT? When we blast through on a distribution cycle, the manipulation is not the wrong way. It's just one part of the cycle. It needs to go down, and we blast up because this is PO3 liquidity that was unable to be referenced the first time, these levels. So we do it again on distribution. And it's again, we don't come in putting order in the marketplace randomly. There are certain times and places for these things. Again, we're going to talk more about how specific time and price is. All right. Next one we're going to talk about is gold. The only difference that the gold is from like NQ, NQ again runs on New York time. And we're going to talk about this on our next segment. Gold runs on Stockholm time. I have more resources and videos and tutorials and other things in my Discord. And these are some videos that are not going to be on the public YouTube pretty much at all. It goes a little deeper to these ideas. It goes deeper into gold back concepts. It goes deeper into my concepts that I've made for my students. It's worth it to join the Discord, man. You guys will see these public videos every day. My Discord has all the advanced level stuff. So there's only but so much I can tell you with these concepts, and I do give you a lot. If you want to learn more about how to navigate these markets, I come in and I give you not just like how I trade, but with the concepts that we actually use, I can help you build a personal model, no problem. And that's what I do for my students. Okay? And watch this. I told you the 8:30 would be a thing. But doesn't change this at all. And so, watch this. Still inside your dealing range, isn't it? Now watch. And again, we're on like the 2-minute chart. Are you surprised that the news happens inside of your manipulation cycle? You can't be. Every time you've traded news, it's just a manipulation cycle. Or if it's a 10 o'clock news, it's a distribution cycle. That's why people need to understand what manipulation is, how it functions, and what it does, because you're not going to get scared about this. And what did I tell you about? How many people just got an account fucked over right there? I told you about the partition here. If it's going to go up, it's going to make stop runs. This is what's going to scare people. New dealing range. It's all about reading the book between the lines, right? We understand how price interacts with the levels in a support way, a resistance way. It leaves things open for liquidity. We understand where some of these PD rates are going to form for sure. So we understand that by the levels themselves, order block, fair value gap, liquidity void, these all have to go through the right level in order to actually work. It's not going to be anywhere that we're just going to expect fair value gaps to start randomly working. And again, you see how it's being annoying right now? That's a function of manipulation. It's going to be on that low and that high, kind of playing around and giving you evidence of both sides for a moment. It's going to annoy people, and you need to get comfortable with that. But it doesn't change the objective. So us talking about AMD, what it looks like for expected price action, and the functions of these things. Because when you have the functions down, you're not going to be super, super scared when price does all this crazy, funky shit. I'm telling you, you don't have to do a thing. But I do want you to just listen. Understand that price is not going to randomly just spike up and stay there. We talked about why. There's other things. Again, we spike liquidity. I talked about a stop run. Every time we talk, we're like, damn. It's all about market narration, is what I'm teaching you what to do, or how to do rather. The levels themselves are not too difficult to play around with and study. What makes it difficult is people get anxiety about like which dealing range I'm looking to use and why. So the same way we were on the 729 to start, and now we're on the 81 because we're intraday trading. This is why you need to come down and understand by default that everything in the marketplace, every concept that we talk on, whether it's basic as a fair value gap or slightly complex as a whole power through dealing range, every concept is fractal. There's a bigger version of it, a small version of it. It could be found on multiple time frames. All these things are fascinating. And look, I'll highlight that. We still have PO3 here, but this EXT level though. And the whole thing is you're watching for reactions here. Obviously, this is a point of interest. High of the 81. If it wants to blast up like this, watch. See how the indicator shifts? Even slightly when it does it. If you're confused on which one you want to use for the above or below dealing range, just wait. Don't force it upon yourself. Just wait. Like I said, over time, you'll get used to seeing the reaction points. You'll get used to seeing where price is rejecting one side or the other. When price is super rejecting one side, again, you're going to use time to verify it. Every single time. What do we do? Now, in your mind, you got to think. People will do things like that. No problem. Part two, when we talk about gold, we'll get really, really into the AMD as well. Okay. We have some market reviews coming later in the day. So we will pop back and we will look at YM and gold again. We're also going to do a study on the stock market. So we're going to look at SPY. We're going to look at NVIDIA. or AMD. So we're going to see how, like, and again, you see what I mean about the levels. You can come in, even though the price action is quite difficult, it's understanding of the objective that I want you to do. We talk about how price stop runs a DR, but the real EXT and the high lays the foundation for why this is a perfect sell move. All this scary stuff is only to trick you because it's a manipulation profile. Look at that. You see what I'm saying? We've been talked about PO3. You gotta understand what I'm saying, yo. We haven't left this dealing range in a aggressive way at all. We performed a little stop run for the news. That did not change my actual bias yet, did it? No, not at all. Even if this wants to come down here and go back to the high and leave more liquidity open, that's cool. But you understand the objective and what I mean, which is fractal. And again, I love the 1 minute because you can see exactly what I mean by watch this. Liquidity void. I tell you guys all the time, this is my favorite PD array on our levels. Why is that? Because you remember my little inside joke. Liquidity void does what? Long, insane price swing, long, insane candles that go one direction. This is not lethargic at all. Once you pass through that liquidity void level, and we're in a premium, so we're looking for it to be sell side. We're coming from a premium. You stopped here in remember what I said, price does what? It goes from premium, discount, premium, discount. You're not going to be confused. All it does is stop run the previous DR for the news. It can get up there later, maybe if it wants to distribute. But for right now, in the rest of this manipulation cycle, do you see what direction I gave you the entire time and never changed it? I talked about why. The liquidity that was offered to you up there, it's already taken. EQ again. I told you. EQ gives a measure of consolidation a lot. When you pass through this liquidity void level, look at this candle here. News needs to interact with liquidity void levels. So we have a bunch of content coming on the channel today. We're talking about liquidity void levels. We're talking about gold and how this same idea we're doing on YM plays on gold. We're also talking about expected price action versus function. Okay. And we'll do market reviews for a few different things. Right. So you guys tell me if this was helpful for you or not. Feel free to leave something in the comments. If not, I don't really care. Uh, you guys can tell, like, I make videos on YouTube. Does that make me a YouTuber? I guess so. That sounds hilarious. But long story short, I want to see this thing basically take these lows. If you don't do it now, I'm gonna do it later. But long story short, you see how the levels influence price. Even the small consolidation in here now because of EQ. What does it leave open? Right from the fair value gap level. Fair value gap. Liquidity void makes long, insane runs, either direction, when needed. Trying to get you guys comfortable. And so I don't mind these, bro. Like I do these longer lectures a lot every single day. I'm here every single day. And so I have a private mentorship, private Discord, um, just plenty of resources for free here. There's plenty of content you guys can interact with. And there's so much to learn here. Okay. So I'm gonna go get some food and we'll come back because it's 8:42. And I have a one-on-one session at 9 anyway, so um I will catch you guys in the 4 new videos later today. Cool. See you later.